All right, how's it going, everybody? My name's Antonio, and you're watching the CEO Barbecue. That's all I have. I don't have a fancy intro, but you don't need a fancy intro because I've got a uranium, a copper, and a gold stock to go through today, all at different stages. The uranium stock is a very early exploration story. The copper stock is a recent discovery that's been growing quite a lot. Share price too. And then the gold story is an almost $100 million development story that's also in growth mode. So a lot to go through here today. And if you want to talk to me or anybody else about these companies or any other companies, please head over to resourcetalks.com where you'll find our support group for avid gamblers. It's really what it is. But yeah, it's a Discord server. You can come and talk to us. Even if you don't have a registration, it's kind of fun sometimes. As always, though, fair disclaimer, honest confession. I have no idea what I'm doing. As I always say, none of this should be interpreted as any advice of any sorts, not marriage advice, not investment, not financial advice, none of that. Just look at these conversations as what they really are, which is general and impersonal private conversations between talking heads on the internet, both of whom you've likely never met. And I hope your mom taught you that lesson, but please don't trust strangers on the internet or in real life for that matter, because you just never know. Instead, head over to setterplus.ca and consult the company's official filings, as well as talk to a professional investment advisor before, of course, taking your own decision in the end, because the mineral exploration, development, and mining industry is among the hardest industries to make money in, to profitably deploy capital in. There are many visible and invisible risks that you sometimes think of and sometimes don't, and you basically lose all of your money if you don't do enough research. That's what it is. In addition, I want you to know that one of the companies that is going to be featured in here, that being Thesis Gold, is a client of Resource Talk. So they are paying for the production of this video, but that doesn't mean that you should think of this as independent research, because it's, again, it will also include forward-looking statements about uncertain events that may or may not happen in the future. And no, I don't send any questions up front. I don't give any editing rights to the companies and all these things. I try to ask them fair and direct questions that viewers want to see answered, and not the ones that companies like answering. But still, please be careful with these things. This is not a joke, and you should approach this with caution. But all that said, first up this week is Chris Timmons, the new CEO of Pegasus Uranium. This is an early stage uranium exploration story with 5 projects, 4 of which in the Athabasca Basin, 1 in Utah, and even 3 gold projects that we might touch upon later on. Companies listed on the TSX-V under the ticker symbol PEGA, where volume has actually been picking up a little bit lately. So there's an average of about 100,000 shares trading each day, with a 52-week high of 40 cents and a 52-week low of about 7 cents. With a market cap of only about 4 million Canadian dollars, and after the recent rollback of the shares, there's now just about 19.5 million shares outstanding. And so with that, today this is a 21-cent stock. There are also about 1 million options and over 9 million warrants, resulting in a give or take 30 million fully diluted shares. As of the end of August of 2023, which was the last official financial statement, the company had a little over $60,000 in cash. There was some tax receivables on there. There's some marketable securities and some prepaid expenses. And so that's resulting in about $110,000 in current assets. No positive working capital was recorded at the end of that quarter, though, because there was over $500,000 in current liabilities. But the financial situation is likely different by the time people are listening to this, because Pegasus raised about $650,000 at the end of last year, about a third of which, by the way, was flowed through. So that's supposed to be used in Canada on the exploration side. This is an early stage exploration company. Pre-drilling, so no drilling expenses and no large exploration expenses were made during that quarter. But for the 3 months that ended in August, again, of last year, the company spent about $170,000 on G&A, which, if we subtract the share-based compensation, result in about 50 grand a month of cash burn. If we'd annualize all that, this quarterly data, that is. But again, watch out for the last quarterly or maybe annual report by the time you're listening to this. And boring stuff to the site, 4 projects in the Athabasca Basin. As I said, they're relatively new. They were staked in 2021. They haven't been drilled yet by Pegasus specifically. And as far as I understand it, the one of the 4 that is drill ready is called the Pine Channel Project. Not a huge piece of land, about 6,000 hectares. That's 60 square kilometers, or about 15,000 acres if you're using some weird imperial measures. And but the Pine Channel is located not where you typically used to see uranium projects in the basin, as it's on the northern side of the basin, close to the eastern shores of Lake Athabasca. But as I said, it's a drill-ready project, and actually a 10 drill hole program is planned for this year. Shallow drill holes, so we're talking about 1,500 meters total. So this will be the focus of discussion today as well. And then a bit more to the northeast from this project is the Mozzie Lake project, which is expected to be their secondary or tertiary focus for 2024. There is a small, relatively low-grade historic resource on it. I believe it's about 500,000 pounds at about a 0.1% U3O weight. But again, we'll have to wait to 2024 before, or maybe 2025 before we can see what comes out of the ground. I mean, it's depending on the financial markets too here a little bit, of course, since again, early stage exploration. The other two Athabasca Basin properties are a little bit more to the east from the Pine Channel, sort of on the northern outskirts of the East Athabasca Basin, which is typically where all the action happens. Both are early stage exploration, but not much is happening there as far as I could tell right now. Because besides these four projects, as I told you, Pine Channel, the main focus right now, then they also have another project down in Utah, in the US. This is central Utah, pretty much in the middle of the state, actually. And they're also north of the neighborhood that might be known to you from companies like Energy Fuels, Western Uranium, Kraken Energy, ISO Energy, Anfield. They will have sort of land holdings in that one spot. And then some 5 kilometers to the north is where Pegasus Utah project is. So some geological work is happening here in 2024. Maybe some drilling. Again, that's dependent on whether or not they get first of all, if they get permits, but also if they get money to do that, of course. But some mapping and channel sampling, I believe, is also happening right now as we speak, as of the last news release. And being in Utah, this was a past-producing property during the U.S. uranium boom in the 50s and the 60s. So that's why this is probably going to be the secondary focus for the company after Pine Channel. There's also, by the way, 3 gold exploration projects in BC, as I mentioned at the beginning, that Pegasus has its hands on right now. Again, not the focus as far as I understand it. They are completely refocused, if you will, to uranium right now after the CEO change last year. So I'll save you the overview of the gold properties, and hopefully we'll hear about what the plans are for those 3 as we move on. But for us to hear anything, though, that would likely mean that I'll have to cut the cackle and Chris, give you the word, I suppose, because in a nutshell, what I'm saying here is what I'm making out of his story. Please correct me where I'm wrong, of course. But what I'm really wondering with this, and in general, is that it's no longer the beginning of the uranium cycle, right? We're no longer in the $20 a pound range, and you sort of pop out of nowhere, refocus the company from another commodity to now uranium. Well, you're the new CEO, and that's why you came in. So I suppose my question here would be, what's my guarantee that you're not going to pivot to gold or tin or silver or whatever else it might be that the next hot commodity is going to be?
Hey, nice to meet you, Antonio. Probably should start with some housekeeping first off. We actually ended up letting our 3 other properties in the Athabasca Basin drop. So what we have now is just our Pine Channel property up there.
Okay.
So these properties were picked up in 2021, and the past management didn't do any work to these properties. So of course, work credits in the Athabasca Basin are very high. If you're not working these properties, you're going to be in trouble. And these 3 properties were not worked by past management. We came in 2023. I went and kicked around several options to keep these properties inside Pegasus, but they all involved large amounts of capital. What we're looking at is an expenditure of $750,000 in prepaid work that we would need to do. So basically what that means is we're going to have to come in, give Saskatchewan Minerals $750,000 in prepaid work. So that means we have to give them basically a bond for $750,000 and then go out and do the work to the 3 properties. And I'm talking about Mozzie Lake, Bentley, and Wollaston. So we would have to give them a bond for all that money and then turn around and go out and do all the work inside 2024. That's a pretty big ask in this market when we didn't have the capital to do it. I don't know many explorers that could have come up with the capital, because you're basically looking at 1.5 million to set foot on greenfield projects. Mossie Lake did have a historical resource estimate, but of course that was back in the 1950s when that was done. So basically, we would have had to come in and work that whole property all over again to bring it into some kind of compliance, which we were excited about doing in 2023. But unfortunately, just we couldn't raise the capital to cover all the projects that we have. So what we did is we dropped these 3 projects, and now we're going to focus on Pine Channel and our Energy Sands project in Utah. So that's where we're sitting right now as far as our properties go.
Okay. Well, thank you for correcting me on that. But again, how do I know that this is, since that it's now a uranium exploration company, how do I know it's going to stay one?
I love uranium, plain and simple. I wanted to be CEO of this company because of the uranium assets. That's really what I want to focus on. I've been a big fan of uranium for years. In my views, we have an energy problem. And really, how are we going to fix an energy problem? Solar, wind, whatever, they're great and all for their specific applications, but they're not a baseload power. So I fell in love with uranium just on the whole energy side of it. And of course, we have now a supply issue with uranium. So I love it even more. But I don't plan on changing this company from uranium. This is where our focus is. This is our community that we're involved in. And this is just really what I want this company to do, is be uranium focused. I'm not a lifestyle person. I come from the oil patch where we go out every day and we do things, accomplish things, and work on our projects. That's just who I am. I'm a goal-oriented person, and my goal is for Pegasus to find uranium. So we're not going to pivot from uranium. We're not a lifestyle company. And that's part of the reason I was brought in by investors to be the new CEO of this company, was to stay on point and not just chase the most current fad. I mean, there's enough companies out there chasing fads. We're not going to be one of them. We're going to put our head down. We're going to focus on uranium.
Does that focusing on uranium strategy, does that include you spinning off or optioning out the gold properties in BC?
That is one of our things that we're looking at doing. So we did have to work the property this summer, and back to that whole work credits, right? If you're going to hold properties, especially in Canada, you have to do work on them. If you don't do the work on them, you're going to lose the properties. So we went out this summer, we did the work that was required to keep this property in good standing. So now we have these BC properties, they're gold and copper properties, are in good standing now until late 2025. So if we don't work them this year, that's fine. We're good. We've got till next year to worry about it. So these properties are a little, ace up our sleeve, a little something in our back pocket that eventually will monetize somehow, whether it's a spin out or JVing the properties off or an option agreement. We'll find some way to create some value for all the shareholders involved and still stay focused on uranium.
What would it take for you to do a deal, though, or what does that look like between optioning them out or just spinning out the company? Like if I came over to you tomorrow and said, Chris, I want to start my own gold company, what would you want from me to give me a 100% interest in the gold projects?
I'd want to know you're not just going to use it as a listing property and then park it and never touch it again. That'd be the biggest thing. If someone's going to option a property off me, I want to know they're going to work it. I mean, what's the use of me having this property? I mean, I think it's a great property. That's why we're going to try and keep our hands on at least a piece of it, no matter what. Because honestly, the geologists are very excited up there, and there's probably a good chance for some high-grade copper gold intercepts. But we're not going to just option this off to anyone. We want someone who's going to come in, put the real time and effort in to work this property. I don't want this option sitting there for 3 years on someone's portfolio and doing nothing. And that doesn't work for anyone. So we'd want a real partner and someone who's really going to be serious about working it.
But it is optioning. So you're not thinking, you still want to keep exposure to the assets. You're not thinking of just spinning them out or something else.
A spin out would still be kind of staying inside because, of course, all existing shareholders at the time of the spin out would get a dividend. Basically, they'd get shares in the new corporation. So in a sense, that's still keeping it, because I'm a large shareholder of Pegasus. I'm well over 1 million shares myself between warrants and options. So, I mean, if we can spin this out and all investors get a dividend and a small piece of that property for the future, I think that's a win for us and investors.
Fair enough. Fair enough. It'd be interesting to see where that goes. Let's do talk about Pine Channel here. Again, you said that's the focus right now after you've dropped everything, and then you have the Utah property, which we can talk about a little later on. But talk to me about the main geological thesis on Pine Channel. As I mentioned at the beginning, the northern side of the basin is typically not where the action has been. And then you have both Denison and UAX trying to explore there in the past, but there isn't much noteworthy going on there right now. So why did the company, those before your time, but why would they pick up these lands? What's the geological thesis here?
For Denison, it was really when they started working the property. They did a bunch of drill holes in the area, and from what we can tell, they were encouraged by what they saw. But of course, this was back in the 80s, and uranium prices just kind of fell off a cliff, and no one wanted to spend money on uranium. So
Hmm.
of course, Denison moved on from this project, like many people did in the basin, and in general, uranium stocks. So, and UEX came in 2005. They did a small program on the property, which advanced our knowledge a little more. And again, prices dipped off and they moved on. Now we're here in the late 2020s, early 2020s, whatever year this is. And we've got more techniques now in geology and stuff that's a little more advanced. So we think, with some modern, like we did a radon survey on the property, which really showed us that Denison was in the right area. So our radon survey kind of followed along and showed that they were in the right area. And you have to think they're seeing anomalous uranium. Like they did have a grade of 0.15%. That's really encouraging numbers. If you're one of the like base load or something like that, and you're seeing those numbers, you're encouraged. You know that you're kind of probably in the right area. So we're seeing the same type of stuff here with what Denison did and what UEX found. That there is something here. Is it on our property? We won't know. But is the hints and the Pathfinder stuff there? Yes, it is. And again, you said this is the Northern Basin. If you go across the river to the north, you got Uranium City. That's been mined in the past. So we know that there is some economical uranium there. So, and we're not that far away. It is again across the river. There is a geology break right there around the river. But again, we got similar geology to Patterson Lake and all those other ones. And there is some hints that what we're seeing here, especially along the Patterson Lake side, is a trend that runs right up into the Thelon Basin.
Hmm.
So it's really, really a hypothetical at this point, but there's something there. There looks to be a connection between that stuff that comes out of Patterson Lake, runs up through the center of the basin and right up into the Thelon Basin. And Pine Channel is along that edge of that similar structure. So we're very encouraged that there could be something here. And unfortunately, we didn't get to drill it this winter. We had to make some hard choices. With the warm weather we saw in December, we had to decide whether we were going to put out the initial cost. Like you don't just put a drill program together and change your mind at the last minute and think you're going to get all your money back. If you're going to commit to a drill program, you got to start handing out those money. And as you're handing out those dollars and you cancel the program, some of them might come back, but a large portion are not going to come back to you. So when in December, we started getting worried about the weather up there because I am an oil patch guy. I've worked on ice roads most of my career at some point. So I understand the importance of having that groundwork. Again, most people are flying in. We were going to do a ground program that was vehicle supported. So unfortunately, this warm trend in December really got us worried and we had to start making choices. So we decided that it was probably best just to hold off on this program, reevaluate, and then decide in the future whether we want to drill it through a summer with a helicopter supported, or do we end up waiting for 2025 season to drill this property?
Hmm.
So again, some hard choices. We were really hoping and excited to get up there this winter and drill it. But we're explorer early stage. We can't just throw money around and hope something comes out of it. We got to be very careful with every dollar we spend. It's hard enough raising money in this market, let alone to go around and waste it on hopes and dreams. I mean, exploration is full of hopes and dreams as it is, but why would you want to make it even riskier by trying to execute on a program that just might not happen because of simple things like there's no ice on the ground for our trucks to drive on?
Hmm.
Sorry, it was kind of a long-winded explanation, and I went off topic, but that's kind of where we're at with Pine Channel.
Right. That's something we can touch upon later on, but it's sort of getting to understand the thesis that you're attacking that with is important. And you mentioned kind of a couple of things there. So you're mentioning baseload sort of working with that Athabasca 2.0 strategy where they're saying unconformity related but closer to surface, which was actually the original strategy that, well, Uranium City, you're mentioning it, that actually made the Athabasca Basin what the Athabasca Basin was. But then you're also
Mhm.
saying that it's on corridor with the PLS. So the PLS corridor, for people listening, that's where fission next gens deposit. So that's where Triple R and Arrow are on. But those are deeper, higher grade deposits. And sure, fission's got a portion of it is shallower than Triple R. But again, Triple R, the big boy in the basin is rather deep. And you were only going for shallower holes. So which one of the two things is it? Like what exactly are you looking for here? What kind of deposit?
We're looking for the basement hosted. That's the thing with this property. It is shallow, it is
Mm,
basement hosted, and we're probably closer to base loads type model than anyone else's because we're kind of like in the same formation. Now, they're obviously on a completely different side of the basin than us,
yeah.
but for like as far as the formations and stuff go that we're exploring in, we're very similar. We're looking in the same areas because they actually bend around the basin. It kind of comes around the base and it goes up to the top. It's like a little inverted C, right? A backward C, and we're in the same geology. We're just in a completely different part of the basin. What this property does offer is most of the deposits are being found in that basement structure where it breaks up. So our property goes from the basement at 60 meters down to 113 meters. So through all that, you're having this break in the basement, and those breaks where that that it declines or inclines, whichever direction you want to pick, that's where you're looking for this uranium to get trapped in. So because of that steep angle of the basement anomaly there, basement structure, we just figured there's got to be something trapped in there somewhere.
Mm,
It just looks very favorable, and we want to get in there and look for it.
mm. Do you have, so the drill program, the 1500 meters, that's not happening this winter, but do you have your drill holes called, like, do you know exactly where you're going to be drilling?
We had been working on all that. We kind of put a brakes on it right now, but we had basically they started on that. What we were going to do is we're going to go in and kind of take, so with the radon survey and then our Denison work that they did, we're going to take those numbers and kind of figure out where the radon survey said we should drill and then where Denison did drill. So
Mm,
we're going to straddle some of their drill holes and then we're going to test some of the conductors out on the property.
right.
So that would give us a really good spread out. So of course, we're going to have to spread out their drill program a little bit, but we were going to straddle the Denison holes based off the radon survey, which we did, and then test the conductors out. So it's pretty much, what you do if you're going to look for this basement hosted uranium.
You also use geophysics, which you are. You have these three anomalies that there's a map on your website that people can see, and it's probably on the screens right now. Those are east, northeast, and west, southwest trending geophysical anomalies, by the way, for people listening. So they sort of go from right to left to right, depending on
Gotcha.
how you want to look at it, under
Yeah.
let's call it a 20 degrees angle or something along those lines. And they are parallel to the ice movement direction in that part of the basin, which was also notable. Um,
Yep.
so that's basically what you're going to be using to know where you're going to be drilling, right? You're drilling alongside these three anomalies, I assume.
Yeah, we're going to drill along those anomalies that we saw. And actually, if you go and look at our radon survey, and like we're going to put a slide together, it's in the works, but we actually want to overlay the Denison that they did over with our radon survey just for people to get a better idea of how Denison was actually kind of in the right area. So we think with some fine tuning and some drilling, we can kind of tighten up and see if if there's something substantial on this property. Another thing we're going to do, since we're not going to drill immediately, we are going to keep working this property again. Back to this, you got to work these properties if you want to keep them in good standing. So we're going to do a gravity survey is what we're considering right now as our next possible geophysics we're going to do on the property, which would be a great complement to the radon survey that we did do. So, if we've got the time, we have some money that we need to spend on the property. And if we're not going to spend it drilling, we want to spend it, advancing the project. So come in, do a gravity survey, and that again will help tighten up where our future drill holes are going to be.
Hmm. Do you? I'm trying to see what the weather is in northern Saskatchewan right now because I'm seeing that it's very cold in Alberta. Where are you at, by the way? Where are you right now?
I'm in Red Deer, Alberta. Blackfall's actually just
So
north
it's
of Red
cold,
Deer.
right? I mean, it's
It's
probably very
cold. Yeah,
cold.
we've had a week of cold here. Yep.
Okay.
And I've had that comment. Well, it's cold now. Yes, it's cold now, but normally it's cold all of December, all of January, and then we were going to drill in February. And of course, it got cold the last, just in the last week here. So could we possibly do it? Possibly. But could we get up there and find out that the ground's insulated enough with the snow and we didn't get the freeze we wanted? And now we've got mobilization of heavy equipment, which we have to pay for, and they can't get onto the property. So, I mean, it's a lot of risk. And if we'd had a cold December, this risk would not be there. Like, it's all you need is that cold December and you're smiling. Because you
Okay.
know yourself, January's typically cold anyway. So that kind of really sets in that cold into the ground, and then your roads are good.
You also need the First Nations to be smiling, so you shouldn't be the only one smiling. How's that? How many First Nations are you dealing with? How's the relationship?
We're just dealing with YNRL right now, and so far they have no negative comments. We will have to have another consultation before we do a drill program up there, of course. So as it stands right now, we're on good terms. We will have to do another consultation when it comes time, of course, to announce the drilling and executing of that program, because they'll want to see where our drill pads are going to be and make sure that we're not in any areas we shouldn't be. So we will have to have another meeting with them here at some point in the future, but as it stands right now, we're in good standings with them.
Okay. Are they familiar? Is that First Nation specifically familiar with drilling? Because again, it's a while back that UXC has been there. So are the current leaders familiar with the exploration industry?
Yeah, they are. Yeah, they're
Hmm.
very knowledgeable what's going on. I mean, you have to think the YNRL really does just focus on, you know, um, dealing with the basin itself and all of us explorers and producers in the area. So no, they're very familiar with what's going on and they're very knowledgeable.
Right. Okay. But so well, eventually comes down to no drilling in 2024. Are you going to be drilling in Utah then?
Utah. So what we're doing right now is we just started, like you said earlier on, that we just started our mapping program down there. So we're going to go in there, we're going to map the structures, we're going to go and check some of the tailings that came out of the historical works, and we're going to put the plan together to apply for the drill permits.
Mm.
So this 16-day program down there, it's going to map out our formations. It's going to let us know where all the tailings were done in the past. And we're going to try to put together where we want to drill the property. So it's 16 days should be enough to give us all that information. If we need to do more, we have the budget that we can stay a little longer or go back and do some geophysics that we might want to, approach and see if to tighten up our drill targets. It's a very encouraging area, though. Western Uranium is just a couple miles to the east of us, a long trend, and they've got like 3 or 4 deposits up there that total 3 to 4 million pounds of uranium, and they got another 3 to 4 million pounds of vanadium mixed in there too. So I mean, it's a very prospective area. I mean, we've got infrastructure. We're right off a highway. We've got Western Uranium just to the north of us with known deposits. They're in historical in nature, but they're there, and they're pods, right? So they got one deposit there that's 2.2 million pounds, and that one's just to the east of us by like 2 miles. So we're pretty encouraged. I mean, just because you're next door doesn't mean there's going to be uranium there, but we've got next door and we've got the historical mining on the properties. So I mean, we're excited to get in there and just kind of see what the geologists can find.
Mm. So if we look at the money that you have right now, which is I'm just gonna guess somewhere between $600,000 to $700,000, how are you splitting that? What are you budgeting that for throughout 2024, and when do you go back to the markets?
So what we have is about 500,000 in the till right now, and we're going to take that money again. We've just started the work down here in Utah. As we've talked about, we're going to do some work up in Pine Channel, which of course that'll be the flow through funds we raised will be allocated towards our Pine Channel property. And then we'll take the hard dollars that we raised that'll get the ball rolling down in Utah. So we can get this mapping and sampling done. If that looks good and encouraging, we'll go in, apply for the drilling permits. And and within 30 to 45 days, hopefully after that, we have a drill permit. and we can look at raising money to go in and drill down in energy sands this summer. Now, what we do have though is so we did an 8 cent raise here back in August and September. We closed it in 2 tranches, and those warrants were at 12 cents. So we're already getting inquiries from investors from that 8 cent rounds where they want to exercise those warrants. So between now and summer, if we can get those people exercising their warrants, that's going to bring in about $400,000 to $450,000, in a perfect world, of revenue for the company, or not really revenue, but of cash into the company. And we can allocate that towards energy sands. A drill program down there can cost us anywhere from $300,000 to $500,000, depending on how deep we go and how big we go. So, if we can keep that 450,000 coming in between now and summer, we might have a built-in fundraiser right there that can cover the cost of energy sands. Again, this is a perfect world situation, but we're trading at 20 cents. These warrants are at 12 cents. And the stock is just getting better every day. Like, we're cleaning up, the shareholders that are profit taking. I mean, there's some 8 cent paper. There's people got 8 cent in the private placement. They're very happy. And of course, they're going to take profits. I mean, how many people have doubled their money plus on a private placement in 2023? Not very many. So our investors that are taking some profits right now, we're happy for them. I mean, that's what everyone's investing for. We're all trying to make some money here off these stocks that we're invested in. And our investors currently are in the money. And if they exercise these warrants, they're actually going to fund our energy sand project here in the summer. So perfect world situation. We might not need to do a raise. But that said, we're a junior miner and raising is pretty much what we do.
Yeah, totally. Well, it's interesting to say that if that comes in, you're not going to have to do a raise, because if that comes in, let's round it up to 500. You've got 500 now. That's $1 million. If my calculations were correct, you're spending about 50 grand a month. Well, that's 600 grand in G&E. And then you have the float. It's almost certain that you're going to have to raise at least on the back end of the year. You're going to have to raise money. But is that number correct? Because that's a big assumption there. They're spending 50 grand a month in G&A. Is that what you're budgeting for 2024?
So our actual, just our basic cost, as far as people that work every day for the company, we're around 30,000. So the other 20 that you're seeing, that's going to be we've hired market makers, which we have Red Cloud as our market making right now. So we pay them a monthly fee. And then we've got a couple other companies that we're working with now, of course, a little more steady, and we're paying them a fee. But those can be adjusted if things get tight. But I would say 50,000 is a fair number, honestly, Antonio. That's a good number to work with for investors. But it covers more than just, there is some auxiliary charges in there that we could reduce if we saw a need to.
Right.
So, yeah.
That's a fair answer. Are you going to be expanding the team though? Because you currently don't have any full-time geologists on the management, or there's also no geologists on your board. You're looking. There are advisors on there that I saw that are geologists. But are you looking to take on a new geological team full-time?
We are looking to bring a board member on right now, geology focused board member to start. Bringing in a geology team for us at this stage we're an exploration company. If you bring on a team, you better have something for them to do. And up until now, we had nothing for them to do. So to have that cost just to help plan and stuff really wasn't cost effective, in my opinion. And my board agrees. We were better off to take, we used Derouge Geologic Consulting. They're a very well-known, very successful geology company with a solid reputation. So we've been using them pretty much even before I came onto the company. They were part of Pegasus Resources as far as helping out on the geology side of things go. So we've got great partners there with DGC. So we've been executing with them and using their services, and it's worked well for us, again, because if we don't use them for 3 or 4 months, it's zero cost to us. So as the story develops, we will look, of course, to bring an in-house team together, but we need something steady for them to work on before we can really justify that cost. But we do want to add someone to the board with that knowledge so we can have someone who's really just looking out for us. someone who's incentivized to make Pegasus make the right decisions and help us point ourselves in the right direction as far as the geology side of things go. So we will look at bringing some help into the company here in the future, and that's something we're actually working on right now.
Yeah, I do appreciate having geologists on the board in the management too. I know some people like a geologist CEO. That's not me. I prefer CEO. Personal opinion here, but I'm of the belief that companies should be run by investors and not by geologists. That doesn't mean that one can be the other. But yeah, no, fair point. What about marketing wise? So that 50 grand burn, that's everything. So that's marketing. I mean, you're including marketing in that. What are you doing in terms of are you going to conferences or something else? What are you doing?
So we're actually in that 50 grand, we don't have any marketing. We haven't actually spent any money on marketing. The marketing we've been doing has all been in-house. So I line up the interviews with gentlemen like yourself or ladies like Fabi, and I execute on the interviews myself. So we really haven't brought any actual marketing in. We did bring a firm in to help us do some broker meetings and stuff like that. So we do have someone who's helping us just set up broker meetings, but they're not doing any marketing for us. They're not doing anything. They're just setting up meetings for me to talk to people, and that's all they do for us. So that was really our focus since I came on as CEO, was the retail story. We told it ourselves, and that's really what we've been doing. We've our on Twitter or X, our profile has just grown and grown and grown. Like there was one point I could put a tweet out about Pegasus and maybe 200 people would engage with it. Now we're into 1,000 plus, sometimes as high as 4,000. So we're really starting to get attention over there. But what we lacked was the broker side, like reaching out to the family offices, the institutions, and the brokers. So that's what we've really focused on in 2023, was just doing that outreach and letting them know who Pegasus is, who I am as the new CEO, and what we're trying to do to, change the story and direction of Pegasus. Because, like the lifestyle thing, we got stuck with that. And that's why I was brought in, is to break us out of that lifestyle look of the company. Because I'm not a lifestyle guy. And I'll say that till the end of days. I'm not a lifestyle guy. I like to do things. I like to accomplish things. So we're just going to keep doing that. And as far as marketing goes, we will do some marketing here in the future. We are looking at it. And as the budget allows, we'll increase that marketing. But right now, we've been getting by without any marketing. So we're doing really well on that front.
Yeah, I can appreciate doing that in-house. I'm of the belief that companies can totally pull that off themselves if they wanted to roll up their sleeves and put in the work.
It takes a lot of work. It really
Yeah.
does. Like
Well, sure, sure. But yeah, I mean, I can see how that's the case. And I want you to be, doing interviews for full time or running social media. I want you to be running the company. But at times, like right now, you're not actively drilling there. I mean, you have time to do it. So I appreciate that you're doing it. Yeah, but what are you planning? Are you doing conferences? Are you focusing on who do you want to get in this story? Do you want it to have more of a retail ownership? Do you want to structure it more around an institution? Do you want to structure it more focused on the US or focused on Europe? What are your thoughts around that?
Right now, we are really focused on retail, of course, because we do a lot of outreach on X and all the tap boards, and doing interviews like this really do reach out to retail at the end of the day. That's really who's watching these interviews. So we are focusing on retail and getting that story out to them. And like I said earlier, you need to have those brokers involved too, though, right? Because they're the ones that helping you raise money. Like if you can talk to one broker, that one broker can bring in 10 people that want to join into your private placement. So those conversations are very important as well. You got to just have a nice mix. Like you can't just focus on 100% retail and think things are going to work out, and vice versa. You can't just focus on 100% broker and large family offices and hope things are going to work out. I think you need a nice blend, and I think we're accomplishing that right now with Pegasus. It's just getting that blend of brokers and retail mixed all together.
Hmm. I feel like I'm getting a better understanding of how you spend money, which for me at this stage is very important. So that's where I'm coming from with all these questions. Um, but is that it in terms of spending money? You're not, I mean, you're not planning on staking more ground or optioning other uranium projects. You're happy with what you have right now. You're just moving forward with those two.
We are happy with what we have right now. I mean, the more projects we bring in, it's the more money we need to raise. Like we think we've got a great project with Pine Channel. We didn't get to drill it I mean, that sucks, but we think it's a great project and we're going to keep focusing on it, in the future. And
Mm.
same with Energy Sands. It's another great project. It's got huge potential that we want to chase down. So why would we bring in more companies or more properties and then have even more to spread out this focus? We've got two great assets that we think we should work, and that's what we're going to focus on, is just getting those two projects and seeing what they have. Now, of course, if something doesn't pan out, like say we do this work program down in Energy Sands and you all just come back and say, it's kind of iffy, and then of course we have to figure out something to do in the future. You can't have just no projects that have potential. You need to keep something happening with your story, or you're just a sleeper stock, and that's not what we are.
Mm.
But at this point, we're very happy with the projects we have, and we see no need to expand on anything, like add any more properties in. And again, every time you add more properties in, especially through an option agreement, it's more money out of the till. It's more dilution for all the existing shareholders. And we don't see the need for that right now. Like, we've got great properties. We don't have any paper on those properties. Like, we staked the new ground down there at Energy Sands ourselves. So there was no shares given out to the optioners. There was no shares given out for that staking whatsoever. So we've got a nice tight share structure here, and we're not just giving out our shares at every opportunity. We want to give these shares to people that are going to be here to work with Pegasus and advance the story. So we're really not into giving out shares just to promote the story. Like, at the end of the day, we want to work the properties. We want to show they have merit. And if investors can see that there's merit here, we think that they'll support the stock.
Mm. Let the drill bit do the marketing. I can,
Yes. Yes.
yeah, again, I can appreciate that. Good. Well, I've been through
Old
most
school
of the stuff.
approach to marketing.
Of course, yeah. Well,
Working the
that's
properties.
that's what you always hope for, I suppose. Yeah, good. I'm getting a better idea of where this is going. Thank you for the overview. I'm all out of question. What am I forgetting to ask you here, though?
I don't think there's much of anything. You did a pretty thorough job here. I think we're good.
Okay. Well, thank you so much for investing your time in me, and I hope we can follow up again soon.
Thanks for the interview, Antonio. Look, it's been great meeting you.
All right, next up for today is American Eagle Gold Corp. That's a copper and gold exploration company with an asset in BC, north of a mining town called Smithers. Company is listed on the TSX-V under the ticker symbol AE, where an average of about 450,000 shares trade each day after the recent news. Actually, volume has been picking up. And then there's also a 52-week high of about 50 cents and a 52-week low of about 7.5 cents. With a market cap of 47 million Canadian dollars and about 109 million shares outstanding today, this is a 43-cent stock. There are about 20 million options and warrants, resulting in about 129 million fully diluted shares. 46% of those shares are in what Gen Z would call diamond hands, specifically those of insiders and institutions. And there's also 19.99% in the hands of tech resources, who recently took a larger chunk of American Eagle, basically increased their ownership. As of the end of September of 2023, the company had a little over $4.5 million in cash, which sat on the balance sheet against about $600,020 in current liabilities, mostly in the form of account payables. Again, this is from September, though, last year, so the working capital will be different by the time you're listening to this, because American Eagle did a couple of things in the meanwhile, actively drilling, but they also did a strategic private placement with, as I said, tech, and also Charlie Craig himself. And there's a bunch of other stuff happening, so do check check out what's happening with the financials by the time you're listening to this. And most of the money, by the way, that American Eagle spent during the first 9 months last year went into the ground on that project, with exploration expenses coming up to almost $3 million, which is about $1.25 million if we annualize that per $1 million and about $1 million a quarter. And then about $500,000 was also spent on G&A. So over the 9 months, so management fees, lawyer fees, and whatnot, which again annualized, that's about $60,000 a month in G&A for 2023. Boring stuff to the side. I'm not doing a full company overview here today because American Eagle has been on the barbecue at least half a dozen times. But in a nutshell, again, exploration company looking for copper and gold porphyry. Their asset is in BC. They've drilled 17 deep holes into what they believe is, again, a copper gold porphyry over the last, what is almost 2 years now. And every one of those holes has hit significant mineralization to a depth of about 900 meters and sometimes up to over 1% of copper equivalent in some of these holes. And it is actually mostly copper. I believe over 70% of that EQ calculation, especially in the last as a result, came from copper. 2024 is expected to be another year of drilling. Basically, as I mentioned, they're fully funded to do that because of Tech Resources, who not only owns that almost 20% ownership, but is also funding the program. A few changes have happened though since last time I spoke to American Eagle. So, Tony, now it's up to you. I wanted to kick it off by asking you what did you have to do to get Charlie to increase his ownership? He already was a big shareholder. So, yeah, I mean, talk to me about that.
Well, it's probably easier to ask Charlie himself, but I think Charlie just the guy's been around for a long time, involved in GT Gold, Pretium, bunch of other great stories. He's a geologist. He sees the rocks, and I think his investment just speaks to the confidence that he has in the project overall. I think people are probably maybe 2 years behind where we kind of saw it 2 years ago, and I think they're slowly starting to catch up. But Charlie's at the forefront, and he puts his money where his mouth is. And remember, Charlie's deal was actually at a premium. I think our stock was trading around 19 cents, and he gave 20.5 cents. There are no warrants, there are no
Hmm.
broker fees, but he believes in the long-term viability of this project. And like he told me, so the only way to make money in this business isn't by trading these junior stocks. Some people make a living out of it, but if you want to make significant wealth, it's about finding the projects that you think can be a mine that will have a liquidity event down the line and hold on to them long term. And there's little fluctuations in stocks, which there are with anything, whether it be Microsoft or American Eagle. You hold on to it because the companies that you think will become a mine someday, that's where you really get, the gold at the end of the rainbow.
Hmm. How much money has he invested so far?
Charlie's invested overall, I believe, around $500,000. That most recent investment was $250,000. That's from a citizen after tax dollars that he put directly into the company.
Hmm.
One of the things that he wanted us to do, which obviously, they're geologists, but he thought it was really important to put a significant amount of money in the off season, understanding the geology. That's going through all the rocks, that's relogging everything. Stuff that we can't really market. Oh, Charlie said that's really important because the best pathfinder to copper and gold is copper and gold. And this year's drilling was the first year we could really start to get a handle on the geometry and geology because all of our holes were east-west or west to east, delineated long holes. So it was the first time on this property that had really happened. Last year's program in 2022, 4 of the 7 holes were vertical. All 7 of them were within a very narrow fence. So Charlie says, I believe in this project. I'm going to invest my own money into it, but I want to make sure you guys also put your money where your mouth is and invest and trust in our team and let us do the proper geology work. So, talking to Charlie and talking to Neil, I think there's starting to be a real understanding of how this geology is and how we can possibly connect that nice high grade south copper gold zone to the north copper zone.
Hmm.
So it's going to make our targeting and our drill results hopefully a lot better next year. Our historical drilling, said this a bunch of times, was basically based on shallow drilling. The average drill depth before we came on the property is 175 meters. Very little information. Everything was kind of based on geophysics, our targeting. So this is the first year we'll actually be able to drill on geology. And that's going to go a real long way, as Neil can tell, later on in this interview.
Yeah. Well, Neil, maybe we can talk about that because as far as I understand it, correct me if I'm wrong and add on to it, please. But best case scenario here in it for 2024 is that you're exactly trying to connect that north zone and the south zone into one big, hopefully happy family, while also at the same time potentially proving up more tonnage, maybe to the west of that whole 17 that you just reported. But at the same time, growing that eastern, what is it? Yeah, the southeast zone, I believe that sort of your special whole nine, I believe it's called. How is all that going to be focused? Like how much of the efforts that you're going to be putting in this year is going to be focused on connecting the two zones versus going out and trying to prove up something more around that whole nine?
Well, I mean, in an ideal world, it would be an even mix of that. A lot of it's going to depend on the budget, but right now I think we have a lot of reason to be optimistic that we'll have a pretty robust program put together for next year. What's coming into focus right now with the geology and assays is that we've got these zones, and I don't want to say narrow zones, like 100 meters plus in width and 400 meters in lateral and vertical extent. These high grade corridors with more abundant veining and dissemination. We have a few of these corridors coming into focus in the north, and a very prominent one in the south with hole 11 and 8 to 17, with no drilling in between to infill that. So we've got these very high grade zones within this much broader, highly anomalous copper halo. And we have every reason to hope from the geophysics and what we know now about the geology and the relationship of mineralization to host rock types and its proximity to the porphyry stock, and its position within the IP halo, that there's a very high likelihood that more of these higher grade, possibly higher grade than we've encountered still, corridors exist. And one secondary focus of that will be, as the picture comes into focus of these higher grade zones, we can really pick out the orientation of these higher grade zones and potentially vector back to a source. If these are coming out of a radial source, the porphyry intrusion is a cylindrically in place body, clearly seems to be driving the heat of the system. Then Tony likes to say, there could be the jewel box down there. That's also a possibility. There could be some very high grade that we have yet to hit. And this all ties together: the north zone, south zone, that southeast. It's a very symmetrically in place system as well, because of that circular annular porphyry stock and corresponding anomaly. We've encountered very encouraging mineralization along the west and south side of it. Have not tested the north or the west, or sorry, the north or the east. So we have, a lot of ground yet to cover, but a lot of encouragement that this ground is very likely host to more mineralization.
You said it depended on budget for 2024. What's Tony, maybe that's for you, but how much do you think you're going to be drilling in 2024?
Minimum 10,000 meters. So we have $4 million earmarked for our exploration program in 2024. We've drilled 14,000 meters so far, add another 10,000 meters, but blue sky for us is doing about 20,000 meters. Do a grid north to south of the property, really suss out that scale, but kind of fall into that really high grade and connect the south and north zone. For me, what keeps me up at night is just being able to drill all of that blue sky we have. Like, I'm a glass half open guy, so I believe we will get to the finish line at some point here, but I want to make sure we unlock all that value, because I'm pretty confident there's something at depth. I'm also pretty confident that this thing wraps around to the east, back up north around that donut, and also kind of north of where we drilled 2312. So I want to unlock all that for our shareholders. And I think for us, people look at our property and it confuses them. I mean, they see something in Chile like this, like the stock goes up 10x, or even in the States. But what we're drilling here, what we're seeing here, is unlike anything in BC outside of the Golden Triangle, because of this high grade zone. So I think people are a little confused. But if you look at the alteration mineralization halo, it's the biggest one in the entire Babine porphyry belt. So we always knew that this thing was big. What we didn't know was this high grade, and slowly trying to prove that out. So it's extremely exciting, and I think shareholders are really starting to take notice.
Neil, does that donut thing that Tony was talking about here correspond with what you think is driving with the feeder zone that you said could be deeper here?
Well, yeah, I mean, I don't want to think of it as one singular feeder zone. What we've got is is a series of different phases of diking, likely associated with that initial emplacement of the porphyry stock. Um, but what that alteration halo really has shown us is that there is a proximity sweet spot, and that's likely a function of a host rock and temperature conditions, where the best mineralization seems to be placed. And we've got a much better indication after some later season deeper seeing IP of the geometry of that system of depth. And so there's some very compelling correlations between our middling chargeability response in between the lower chargeability core and the higher chargeability phyllic alteration halo, where the bulk of our potassic zone lies, and that's where we're finding our best mineralization. And this is to be expected within the classic porphyry model. This is, this isn't anything super profound. It's just that we've got a lot of extra validation from the drilling this season that model is holding. What we need to do now is run some more deeper seeing IP lines to the north and south and just give a lot more confidence to our inversion model at depth. And that's going to really help us hone in on the targeting. If we know where these corridors are most likely to drop out the best mineralization, then the better chance we have at intersecting them and putting together this whole picture into clear focus. Right now, we've got 17 7-centimeter wide intercepts through a vast system, and so there's a lot of interpolation that goes on between that, and not all of it may be accurate with that drilling density. So the more we drill, the more we're going to know, and thankfully we're on the right path right now with the geophysics we have of making the most of the drilling we can do.
There's two things that I want to talk about because of the geophysics, but also you both of you are mentioning potentially deeper holes. What are you thinking if we just take the lower boundary and we say 10,000 meters, how many holes is that going to get you? 9 to 10, or are you thinking this is sort of 7 to 8 maybe?
No, it will be more than that. What we know right now is our best zone of mineralization. In the north zone, it can go quite deep. But the south zone, I mean, it starts at 98 meters below surface, and by 600-700 meters depth, we're confidently out of it, depending on the orientation we're drilling. So I would expect 10,000 meters to get us somewhere in the neighborhood, potentially even up to 50 meters. So.
Oh, okay. But that's in that one zone specifically then.
No, that would be, so there'd be some longer holes in the north and there'd be some shorter holes in the south, and a lot of it's going to depend on what we're seeing in the holes as we drill out to the east.
Right. Okay.
We want to get our share price up. Our share price is our equity, but it's about proving the low hanging fruit, the high grade, etc., which are, I call them moderately deep holes, 600 to 800 meters. I think when I'm talking deep and I'm talking unlocking value in the future, you're talking potentially 1,200 meter holes, stuff that Red Chris and GT Gold drilled. But those are expensive to drill, and you kind of do them sequentially after you prove out and get value for the near surface stuff that we know we already have.
Okay, sure. And is that's specifically for connecting the north and the south zone? But with reinterpreting the geophysics right now, Neil, what are you thinking about the east zone, right around that hole 9? How deep do you have to go there?
Well, we got out of the copper anomaly and into the more barren porphyry stock itself at about 600 meters depth. But that's because we were closer. We drilled into the porphyry stock, and we know from drilling out to the west that that's maybe not the sweet spot to drop out the best mineralization. But I would anticipate between 6 and 8, like Tony was saying, for the holes drilled to the south in that southeastern zone.
No reason to go deeper than 1,000 there.
Well, never say never. We don't know really until we're drilling, right? Obviously, if we're in spectacular mineralization at 800 meters, we're not going to. It costs a lot to get you down to 800 meters. We want to keep going and we want to define this. But if we start running into that problem, that's a great problem to have. We found so far through our funding partners that if that's the case, um, there's avenues mid-season to extend things, much like we did, like Tony was able to pull together this year. So
Right.
yeah,
How much of
a lot
that
of options there.
how much of that program is paid for by tech?
We have about
Tony?
3.3 million in flow through left over. And the reason why we did that, I'm very, I really understand the capital market side, and I know investors are really savvy when it comes to that part. So I want to make sure that we're fully funded for this year. So after we came out with some great drill results, which we did, that we didn't start going down because all of a sudden people were going to do a private placement. So worst case scenario, what I say is we have 10,000 meters and 3.3 of that is flow through. We've got about 1.7 in hard dollars. But one thing you have to realize when you're drilling in BC, you get 30% tax credit. So, if you're getting 30% back for every dollar, that's actually a 42%, increase in what your $1 goes to. So, compared to a 61% of flow through versus 42% of just putting hard dollars in the ground, it's not actually that big of a delta. So we're not afraid to put more hard dollars into the ground if it's going to yield us great results. So right now, 3.2, 3.3 of that's flow through. We'll probably use about $700,000 of hard dollars for our exploration program. But we got a lot of options. There's more money coming in terms of, warrants are getting exercised. So those are hard dollars coming in. And we have other options too. I'm hoping that tech will probably top up again. And I call that dilution by not dilution. Those are long-term shareholders that want to be partners in the property eventually and want us to succeed. So everyone's on the same page there.
I'm guessing the number of drill rigs that you're going to be using also depends on financing too. But are you thinking one, two? How many are we talking about?
We're going to do 2 rigs. One of our problems drilling was 1 rig just because, investors kind of time when your results are going to come out. So it kind of becomes a trade. When you do 2, you're more disciplined. Investors can't really time you. And, I think we'll kind of get that kind of, call it fast money kind of out of the way with 2 rigs and a full program. I think people really start to see the light at the end of the tunnel, which, we've seen for the last year at least, and Tech's seen for the last year. They invested significant amount of money 3 times over, I think it was 6 months, May, August, and November.
Right. Do you have something still to report? I don't think, what do you have in the lab right now? Nothing?
All of our assays are out this year.
Sure.
I always get asked about catalysts. Look, the big catalysts are the problem with our story is people don't know about it. So the catalysts are people starting to understand and see these results and starting to piece it together. And at the same time, our team starting to piece it together and then disseminate it to the public and showing them, what's going on, what we see. So the big catalyst is just, it's us marketing. It's more people coming into the stock, getting rid of those old shareholders, coming in at a higher base. So that's a huge catalyst there. I think it's probably the most exciting story in BC, if not Canada right now. And look, we're going to start drilling in probably late May. So drilling's going to be happening before you know it. People always want more drill holes, but look, there's a negative drill holes too. They could be bad. And we ended on a really great drill hole. So we don't really have any negative catalysts coming out in the future. We're doing a big technical webinar. And I think a lot of that really smart geologic money, the geologists that work for the funds, etc. I think there's going to be a big light bulb that comes on very, very soon.
But it's potentially also challenging to balance whatever happens in the meanwhile, because if you start drilling in May, you're looking at assay results when like end June-ish. So what do you communicate to the market in the meanwhile? You say marketing, what do you do for marketing? You go to conferences and so on and so forth. Talk to me about that.
Look at what we've done in the last year. We're a smart group, geologically, capital markets wise. We have good backers behind us. We always have an ace up our sleeve. People didn't expect us to do that deal with tech that created a catalyst. So don't be surprised if other things come on down the road, creative stuff, etc. I don't want to give away too many of my cards, but I think the big thing is like putting this geophysics together. We're going to be doing more geophysics. And look, I think I'm fine with assays coming out 6 weeks after we start. The question is, do we put out 1 hole at a time? Do we put out 2? I'm very confident that we're going to start off the 2000 drill program, with a bang.
Neil, what does he mean when you say more geophysics? Can you talk to me more about that? Exactly what you're doing, why, and what are you hoping to see?
Yeah, right now in the off season, we're looking at a number of different avenues of investigation from the information we got this season. So, uh, like I mentioned earlier, we have the deeper seeing IP, but we also have in hand full trace element 4-acid geochemistry from every meter of core that we drilled this year. And part of the relationship that's starting to come into focus right now is between the different intrusive phases, more distal dikes from the porphyry stock, and the mineralization in the bounding sedimentary rocks. And so we're really hoping the off season to gain a bit better understanding between the different intrusive phases, what geochemically distinguishes them and texturally distinguishes them, and how they bring in mineralization. They're variably mineralized. Some are very densely disseminated with chalcopyrite. We have a monzonitic phase, for example, that's uh, very often loaded with disseminated bornite, which we don't see in the core of the porphyry, where we, with our very limited drilling into it so far. So there's some geometry to be gleaned there, but then also more just characterizing the system as a whole, and that's going to help us interpret on the fly results when we're drilling next season and beyond. So yeah, some pretty important work going on that's going to help us again just be more efficient and agile with the program as we develop it here.
Right, right. Okay. Yeah, I wish I was smarter than what I am. Then maybe I could ask you some questions about the geophysics, but I'm just gonna take your word for it for now and see what the drill hole's gonna return. Um, yeah, Tony, you mentioned there's something that got me thinking about. Do you think you need another strategic to come in to sort of balance the, tech's almost 20% here?
I don't think we need another strategic in. I'm willing to listen to offers, but Tech's been a really, really good partner of ours. They lend a lot of technical support to us. They're good people. So I'm not going to be out there fully marketing another strategic, but what I'm worried about is our share dilution, our capital structure, and looking after our shareholders. And Tech, first and foremost, is a shareholder of ours. So how can we dilute as little as possible, get our stock up, which is our currency, to allow us to drill and de-risk this thing and get to an event where, Tech feels comfortable to buy us, while at the same time for our shareholders unlocking all the value. And I can't reemphasize how much open space there is on this property to drill. It's just based on budget and getting there. It's absolutely amazing. And this area to the south, I call the Tech Prowse hole. But that hole 2309, I think we drilled it a little bit too far to the north, drilling south. But the IP that we came back with after the season, we compared it with our assays and hole 17, we're drilling across a shoulder, and that's symmetrical to what we're seeing in the southeast. And we have that same shoulder there. So if you step out, south and drill north, there's a decent chance that we hit high grade, kind of similar to what we're hitting in 2317. And when I talk about unlocking value and showing investors, not only the high grade, but the huge scale we have, like that's what I'm focused on doing. And we're operating within a budget. We're only $5 million company right now, but we have a really talented team behind us, and I think we can get there. You can only be lucky so much, Antonio, and even our worst drill hole, quote unquote, would be a headline drill hole for most companies out there. I'm talking 800 meters of 0.22% copper equivalent. Within that, we have tons of holes with 100 meters of over 1.05%, 300 meters of over 1%. I think 6 of those 17 holes would be deemed high grade by pretty much any company outside of Chile and the Golden Triangle.
Mm. What do you think, Neil? Do you think the best, the best is yet to come, I suppose, is there's not like your boss is listening, so be wary what you're going to say, but make it make sense to me, because I expect you to tell me that the best is yet to come. But how do I know that as a, non-geologist sort of retail investor? How do I trust you that the best is yet to come?
I mean, the straight answer is there's always risk involved, right? Like we can't conclusively, like if I was to say, oh yes, we're going to hit better stuff guaranteed, I wouldn't believe me. But we have a lot of, and that's true of any geo on any project here. At a project this stage, that's the case. But what we're seeing here, I mean, if you look at geology as a game of odds and chance, this project has a much higher chance than anything I'd be involved in. I'm very optimistic about this. It's very easy to be pessimistic in exploration geology. Most places don't have mineral deposits. Most places you drill are not going to turn out to be good holes, and we have simply not found that the case on the NAC property. The nice thing about NAC is it's relatively focused. We have we're not getting pulled in a bunch of different directions by a bunch of disparate targets. We have one very big, very clearly linked system here, and we have a very good chance of showing that this geophysical anomaly, geochemical anomaly, this all is tied together to something that could very well be an economic mineral deposit. Obviously, it's still very early stage, but yeah, it's easier to be less skeptical about this one, I think, than most projects, just based on all of the real data driven indications we're seeing here.
If I could jump in there, Antonio.
Sure.
It's a good question you asked. It's all about risk-adjusted return. So, yeah, there's a lot of questions on our property, but there's a ton of upside. And for 45 million market cap company, I think we're allowed to have still a lot of unknowns and a lot of questions. So, I think for investors, it's your risk-adjusted return. So, what's the most perfect exploration company out there right now? I'd venture to say it's Filo. It's perfect. It's great. It's going to be a mine someday. How much is it? $3 billion. So, if you're investing in that, yeah, you got a lot less downside than us, but you don't have as much upside. What's Filo going to get to? 6 billion? That's a double, if that. If we really do find what we think we can find, how big can we be? 500 million? A billion? Those are the questions you have to ask yourself. And those are 10x, 20x's. So I think there's a lot of questions out there. I think for investors is how many of those questions do you want answered where you feel confident enough that you've minimized your downside? But remember this, each question that's answered for you is another step that we're de-risking, which means more value, which means a higher entry point for you. So as an investor, what's your risk tolerance and when do you want to get involved? And this year's going to be a big transformational year for American Eagle and the NAC property.
I spend a lot of time online, maybe too much if you ask my wife. But what I've noticed when it comes down to American Eagle and what people are talking about is a couple of people are mentioning you and big, take a symbol big in the same sentence. I'm not gonna pretend like I understand why they want to compare it maybe geologically because I really don't. But I'm gonna ask you, how does that make you feel? I mean, and this is a question for both of you, Neil. How does that make you feel when you think about it geologically? And Tony, how does that make you feel when you think about it corporate wise, where the share prices and so on and so forth, when you see people comparing it to them?
Well, if you really want me to tell you the truth, it makes me feel jealous. I see a lot of stuff that they have versus us. I don't see a big difference, in terms of their results. I like our results. I think our hole is probably a little bit lower grade, a super high grade area, but ours is closer to surface and it's wider, and it's that hole was followed up by a lot better drill results than Big had. And we're in BC versus Idaho. I think they're probably same jurisdiction. Maybe BC's even better because it's a history of copper producing. And the big thing and why I'm jealous is, they have a $180 million market cap, while we have a $40 million market cap. And I talked about the delta between Filo and American Eagle. Well, there's still a big delta between Hercules and American Eagle. And there's a lot of big fans out there. I'm not trying to say we're Filo. I'm not trying to say we're Hercules. There's opportunity with this copper supply glut that's going to happen, that there doesn't have to be, mutually exclusive one property or one company that works. There's opportunity for multiple companies that work. And very well, Hercules, Filo, American Eagle, and others can work. I'm just talking about, valuation. I'm not saying that they're valued too high. I just think that we're undervalued where we are right now. And yeah, the word is jealous because I think we should have a lot of price discovery moving forward. But a lot of it comes down to psychology. Antonio, it's where did you come from? A lot of people don't look at other valuations. What they look at is they missed the boat. So, our stock was at 3 cents, last November 2022, and now it's at 41. So people say, well, that's a 12x. I missed the boat. Well, don't look at it like that. Look at where your valuation is compared to other properties. Talk to a geologist, talk to your financial advisor, and think about where can this thing go. That's the proper comparison to do, not the recent price discovery made in the last 15 months.
I feel seen because I was looking at Philo. Some people were mentioning Philo to me at like $800 million market cap ish. And I was like, oh, it's almost a billion, long gone. I should just forget about not pay attention to it. It's what I did to my own detriment because the stocks that I picked didn't do too well and Philo has just kept going. But Neil, Neil, now on to you. Basically, the same question though. You look at what Hercules Silver is pulling out of the ground. Some things, people are very hyped up on, and then whatever came out after that, what people are not that happy with, it went down now to a market cap of 180, as Tony mentioned. But I mean, have you looked at it geologically? Is there any comparisons that you can pull here between American Eagle and Hercules?
Well, again, I'm not, I've never worked on Hercules. I'm not super familiar with the system, but it sounds like they've got a larger near surface epithermal silver system that they were exploring and had some indications that there's maybe a deeper underlying porphyry source. And I think, from what I've seen over my time in the industry, there's an almost, what's in the box kind of like, what do you take the mystery box that you don't know what's in there, or do you go with something maybe a little bit safer? And I think to Tony's point, like we kind of know what our potential can hold. We have a nice, very accessible central BC porphyry deposit that doesn't need the spectacular high grades of the Golden Triangle or Chile to be economic. And maybe that doesn't have the same allure as a mystery deposit that could have who knows what, right? And so I think what limited us in the past was maybe an understanding that, oh, well, it's a Babine porphyry deposit, how good can it get? What we've shown this year is we've hit grades significantly higher than anything else in the Babine porphyry belt. So there is still a bit of that air of excitement and mystery, at least on our end. It's very exciting opening a box of core, from the back of the driller pickup and seeing just spectacular chalcopyrite and bornite veining. Something we weren't expecting to see when we set foot on this property back in 2022. So yeah, I think there is a bit of a psychological aspect to it there. It's this unknown, rolling the dice on something that could be, unknown versus something a little bit safer. And so maybe American Eagle doesn't have that same excitement. As for geological comparisons, I don't want to speak to what Big has. I'm not familiar with the deposit, but just from a market standpoint and how their share price is reacted versus what we've done, I think we might be limited by that perceived lack of mystery.
Right. Okay. Where I'm coming from with all of this actually is I was taking notes, and it might have sounded weird the way I arrived here, but Tony, you mentioned there that you're talking about potentially an event coming up where tech feels compelled to potentially, and this is the forward-looking statements we always talk about, come in and maybe take you out. What do you think that event is? Is it an MRE? And if it is, how many meters do you think you have to put in this thing before you can come out with something like that?
Yeah, I think, the question is not how many meters, it's how much of that value that we want to unlock that I kind of mentioned before. I think this 20,000 meter program this year is going to unlock a lot of value. But I can't speak for tech. I can speak for companies I worked for before. I worked for large mining companies, IM Gold most recently. And what I know from these big companies is they'd rather buy a company for 500 million than a company for $50 million if it's de-risked. So that's a big thing that you have to think about. But I don't know really what's going through Tech's mind. I know they really do like the project, and I know that they're being really helpful, but they want us to continue to de-risk it, and they're a really great partner. But for our shareholders, again, what keeps me at night is making sure that we hit everything. But this year, 20,000-meter program is going to show that continuity between the south and the north, and hopefully show that there's other really great high grade zones stepping out west, stepping out to the southeast, etc. So, when and if something happens, we'll make a decision that's best for our shareholders. But, until then, we're going to keep focused on the prize. We got a full balance sheet. We got a good drill program. Neil mentioned we're a little bit unknown, but, I think people forget, like Charlie Gregg, who's our lead technical advisor. He's the guy that put GT Gold together, and they sold Newmont for around $400 million. And, he put his own money into this project. But, more importantly, Charlie, all of our cores in Penticton at Charlie's office, Charlie's 65 years old, and he is out there logging every single meter in the warehouse. So you got that guy that made, the most recent liquidity event in BC, who's head of that program, doing all the grunt work, really making sure that we have our geology figured out. So that gives me a lot of confidence.
So to go back to that MRE though that I mentioned there, is that something you're already thinking about, or is it just too early to even talk about it?
I'm not thinking about the MRE right now. Question for you, Antonio, what's the most recent big successful liquidity event in Canadian junior mining? What is it?
Well, everybody likes comparing themselves to Great Bear. So,
Okay. Did they have a resource?
well, yeah, I know you're gonna say that, but is everybody Great Bear? That might be also a question to think about.
I'm not saying we're Great Bear. What I'm saying is I don't think you necessarily need to have that resource. I think what you need to show is there's continuity, scale, and opportunity. I think a resource, if anything, at this stage, kind of creates a bit of a glass ceiling, especially if you come out of resource and it's only in that small little limited area where we've been drilling, and there's so much other kind of upside, because what investors do is they just anchor you to your current resource. So right now my focus is, continue to unlock the value, drill on the blue sky, connect to the north and the south, and getting our currency high enough that, we can really drill deep and do huge step outs. And this thing's absolutely amazing. And it was bird dogged to us by a porphyry gold expert who worked in the industry for 50 years. It was the second best target he'd ever seen. He did the original mapping at Grasberg. So all these things together with the drilling we've had, you can only be lucky so much. Napoleon said he'd rather have a lucky army than a good army. I think we have a lucky army and a good army with Charlie Neal at the helm in our project. So I'm extremely excited, and I hope investors are too.
All right, well, let's see what 2024 is going to bring us. I'm out of questions for now. What am I forgetting to ask you? What should I be asking you?
I think you hit on all the great questions. Catalyst one was a great question, comparing us to other companies. Look, you talked about Filo. Like Filo's at $16, a month ago, 2 months ago. That was a good entry point right there. It's a great property. If you want to get into other proxies of Filo, look at Sendero, which is nearby. Magatis, I think that's going public soon. Even NGEX, you could have gotten at a lot lower price not too long ago. So there's always those opportunities. I think for investors, the big thing is don't worry about missing the boat. Just make sure you talk to your investment advisor, talk to geologists, and forget where the price was. Focus on where you think the price can go in other comparison and what the value actually should be. Look, I had the opportunity to invest in Amazon at $500. I thought it was too high, and it went to $2,000, $3,000. There's always opportunities out there. And if you miss a stock, there's another one to get into. What I'm trying to do there is make sure the public knows that American Eagle exists, that they can invest in us, and maybe that is that next big opportunity to do the 10x. But look, we're going to let the rocks do the talking. We have one of the lowest G&A burns in the whole industry, and almost all of our money goes into the ground. And the only way to create long-term shareholder value is by drilling and proving to the market and our partners that this can become a mine someday. Because in the end, that is the goal.
All right, Tony. Well, I appreciate the update. Neil, thank you as well for being here today, and I hope we can do this again soon.
Yeah, no, thanks.
Thanks, Antonio.
All right, moving up the market cap spectrum, last company for today is Thesis Gold. It's a gold exploration development company with assets in north central BC. Companies listed on a TSX-V under the ticker symbol TAU, where an average of about 200,000 shares trade each day, with a 52-week high of about $1.50 and a 52-week low of about 40 cents. With a market cap of around $88 million and about 175 million shares outstanding, today this is a 50-cent stock. There are few options and no warrants as far as I can tell, so that's about 176 million fully diluted shares is how I think about it. Most of the shares outstanding are held by institutions, so that's 66% of all the shares are held by institutions. Then there's 4% that's held by insiders, and about a third is in the effective public float, if you will. As of the end of August of 2023, that's the last published financial statement, the company had a little over $24 million in cash, as well as about $1.5 million in tax receivables and prepaid expenses of also about $1 million, resulting in a total value of the current assets of more than $27.5 million. Now, that sat on the balance sheet against about $11 million in current liabilities, mostly in the form of account payables, that'd be your management fees and so on and so forth. But by the time you're watching or listening to this, the working capital might be a bit different because Thesis did an $11 million financing after this quarterly report was published, but they've also been actively drilling in the meantime, which of course, not free either. The company spent about $2 million during the first 6 months of the year, keeping the lights on and its people happy, which resulted in about $350,000 a month in G&A, again, over the first 6 months of last year. But do look at the up-to-date financials once you're looking into the company yourself on setterplus.ca, of course. Boring stuff to the side, Thesis now has two projects. There are two adjacent projects in north central British Columbia, not too far off from a town called Smithers, a place that we visited before, at least on the pod, not in real life, but hey, maybe in real life soon too. Together, these two projects, which by the way, they're called Ranch and Lawyers, which kind of sounds like the plot of the show Yellowstone. But together, these two projects make up a 325 square kilometer land package, and a PEA from 2022 showed a resource of 3.4 million gold ounces, and those are gold equivalent ounces in the M&I category, and a little under 500,000 ounces in the inferred category, which, by the way, the PEA says can be profitably mined in an open pit setting with a head grade of, we can call it about a gram and a half of gold equivalent over a 12-year LOM with a $786 all-in sustaining cost per ounce of gold equivalent. I'm normally wary of gold equivalent or any equivalent grades, but again, I'll allow it here because it's mostly gold and the rest is silver, so fair enough. PEA was done with the assumption that Lawyers will produce 136,000 ounces of gold per year and 2.1 million ounces of silver again for 12 years, considering only the open pit part of the deposit, which after some mathematical magic and a 5% discount rate showed a $589 million of after-tax NPV and a 24% after-tax IRR. At that same tempo, the initial capex of almost $500 million is expected to be paid back after just about 3 years, a little less than 3 years actually. And then the total capex, by the way, so that's initial plus sustaining, going to be coming up to $632 million. The mine plan is not hard to envision based on the cross-section of whatever you want to call that is on your screen right now. Probably is. It shows two starter pits, which should be helpful for paying back that capex, especially considering they have rather low strip ratios of around 2 for both of the open pit mines, for both of the starter pits, with the mill being envisioned sort of in between the two pits, which are both of them are basically on a mountain, if you will. And so in total, $105 million has been invested into exploration activities on the Lawyers property by Thesis alone, and that's between 2019 and 2023 all that was happening. But the company believes that the Cliff Creek zone, which is the larger part, the larger one of the two pits that made up that PEA, is still open at depth. So they obviously want to grow it, and they're investing more money back into it. And recent drill results support that belief. I'm not going to bore you by reading the results out loud, but they too probably are on your screen right now. And the bottom line is that Thesis says in this NR that the forthcoming updated MRE will show the expansion of this pit. Essentially, hopefully, that's your forward-looking statements, adding up to the value of that PEA. Now, all that is happening at Lawyers, as I said, but since this summer, after the merger with Benchmark Metals, Thesis is now also the hopefully proud owner of the ranch property, a larger project, again, adjacent to the Lawyers property, and that's to the north. And the 2023 drill program has already confirmed that there is mineralization over there. It's over broad intervals too. And previous tests confirmed that a simple flotation recovery technique would result in above 90% gold recoveries on this project. Again, not trying to bore listeners with more numbers. So summed up, the idea here is to further define Lawyers as potential underground on that one pit that I told you about. An updated MRE on it would be desirable here. Then do an MRE on Ranch and then put them together as, again, hopefully a one big and happy PEA towards the end of this year. Now, I wish real life was as simple as a YouTube video, though, but as everyone would know, it's not, unfortunately. So, loads to talk about here today, Ewan. I'll start considering shutting up now and on to you. You had decent results just the other day, decent volume on the stock too, yet no green candles. What's going on? What's the market not liking about this?
Yeah, thanks for having me on the show, Antonio. And I'm not sure what the market doesn't like. I mean, I think it's just probably general market sentiment at this point. As you said, we had really great results. Basically all the remaining results from the Cliff Creek zone and Duke's Ridge. Headline being 128 meters of about 2.5 grams gold equivalent, including 27 meters, 8.5 grams. And so really strong numbers right through the kind of Cliff Creek deposit, from the north right down to the southern end. And most of those drill results were targeting deep mineralization. As you noted, the objective of this year's program was to drill deep below those open pits to prove up and expand what will be a mineable underground resource in future PEA. So, we hit as expected. Results were very positive, and yet, we're still kind of trending down. So, I don't have a good explanation for you as to why that is. I mean, if the results weren't positive, it would be, you could understand that, but very strong results, doing as we said we would do. So it's it's a tough time out there for everybody, I think, right now.
It's definitely annoying. There's another company that I'm following they just made a new discovery. Good news or whatever, and then the stock started off nicely, but then once volume picked up, there was someone there on basically selling into that volume, hurting the share price. And it's an optics problem really for the market, because I mean, it's not great to see a share price fall after news, because maybe some people are using that as a direction. But as far as I understand it, though, with the recent cap raise in October, I don't assume you'll be going for a raise anytime soon. So, I mean, do you care too much about the share price or not right now? So maybe talk to me about that. Yeah.
Yeah, I mean, I know you covered the financials there from our previous quarterly, and as you noted, those have changed quite a bit. I mean, we raised 11 million, combination of traditional and charity flow through in the fall, and that was really to fund and preserve hard dollars during our drill program. So we completed just under 45,000 meters of drilling last year, and as you said, again, it's not cheap drilling, although we are one of the probably most cost-effective exploration companies in British Columbia, just based on kind of purely where we are and the infrastructure that's in place. We're looking at about $425 a meter. But right now, we're probably sitting on about 8.5, 9 million in the treasury. And that will fully fund us through our major milestones that we have ahead, including the updated MRE, as you said, that will include both projects for the first time and the new PEA. So we are in a good position. We don't have to go back to market anytime soon. And yes, the share price definitely bothers me. You can't help but take it kind of personally. I mean, it's very frustrating. I watch it, every day and try and let it not affect me. But as you said, all I can do, as I said, all I can do is really continue to deliver on the promises that we've made to shareholders. When we merged, we laid out a very strategic plan with a large drill program that was very carefully planned and had some key objectives. I think we've achieved those goals, and the news has been very positive. Unfortunately, the market is not reacting in the way we want it to. But I think as long as we continue to demonstrate that we're growing the project, we're unlocking value, and we continue to deliver on not only drill results, but make sure that the resource is delivered on time and is positive, in addition to the new PEA as well that will be coming early Q3 this year. It's very frustrating, but it's to a certain extent out of my control.
It could also be positive though, and I totally know where you're coming from. I have my own deals, just a couple of them that I watch very closely, and I try to pretend to be stoic and all that, but then at the same time, I just still go to the screen and look at the share prices. But it could also be an opportunity, right? For you, well, in this case, to be picking up more shares. Is that among your plans for 2024?
Me personally,
Yeah.
yeah. I mean, I've traditionally not bought any shares on the market, and I did initially buy some shares when we started Thesis, but haven't purchased any since. And part of that comes down to I just don't have a lot of capital. And I spent a long time in school, and then followed that with trying to find our feet here in Canada, and moving to a couple of different cities, and then working, really getting going, and you know um, possibly. So I'm not trying to make excuses, but possibly could look at buying shares in the future. I mean, it's a fantastic buying opportunity right now. We're trading at a serious discount to our peers. So yeah, certainly an option.
Hmm. Moving from what I presume is Scotland to Canada, why did you move for the weather, or where'd you move?
Uh, I, well, so when I was younger, I think I was 20, 21. I lived in Vancouver for a year
Hmm.
on skiing, mountain biking, loved Canada. Decided that it would be in my best interest to go back to Scotland and get an education. And especially given Scotland is free to get your education as well. So it made a lot of financial sense. And so did that. And then I wanted to move back to Canada to continue my education, but yeah, to enjoy the lifestyle that Canada provides. And it's been fantastic. We love Canada, love living here. It's a great place.
I'd moved to BC as well. I live in Belgium. I'm into skiing and mountain biking too. But when people ask me, do you ski? I unfortunately have to say no because we don't have anything going on here. It's just flat land basically. So it's challenging. How much, let's go back to the company. How much meter are you budgeting for 2024 between the two projects, by the way?
Oh, that's a bit of a can of worms, I think. So, and I'm not going to be able to give you a good answer, but let me give you some rationale as to why.
Hmm.
So I think there's certain things that are within our control, and there's certain elements that are out of our control. And what we're going to continue to do is, as I said, I'm sure there's a lot of positive drill results to come, the new resource, and depending on how the market reacts to that and what our share price does, then that will, provides a lot of optionality. I don't want to raise a lot of capital at these prices, and um, it's you know it, therefore we've got a couple of options going forward. I think in the summer our baseline work is ongoing at the moment, and we can continue to progress. We will continue to progress with that, and it should be complete across both projects by the end of this year. Then what we might look to do is basically drill on the ranch project to upgrade any inferred resource to M&I, and that will allow us to progress past the PEA towards pre-feasibility feasibility.
Hmm.
The more blue sky option there would be to do that plus a larger exploration program focused on our exploration targets and some that are showing very promising results, like the JK zone, the Steve zone at Ranch, and in addition to kind of newer exploration targets that we've identified. So we're evaluating all those options at the moment, but I think part of that, and we've got budgets in place around each of those options, but I don't think we're going to be able to make that decision until, 2, 3, 4 months from now, when, hopefully we've had some positive share price appreciation, and that hopefully the gold sector's responding positively. Hopefully there's a bit of a recalibration between the gold price and gold equities, and we can see some movement there. As I said, I think one of our stock in particular is trading a significant discount to our peers, and if we see some calibration, then that would certainly help us decide on what our plans are going to be going forward here for the summer.
When you mentioned the drilling on Ranch, you mentioned the Steve zone. How is drilling going to be split between the Bonanza Ridge zone and the Steve zone?
So the Bonanza zone, I don't think is going to expand a huge amount more. The Bonanza Ridge, the Bonanza component of it, probably not too much. Ridge remains open, and I think there's good potential there. So we could see some drilling at Ridge to keep growing that system. Steve has only had about 8 drill holes into it total, I think, at this point, and it's got a significant strike extent of over 300 meters. We've mineralization documented down to over 400 meters vertical depth, and there's multiple parallel zones within that range from kind of high grade mineralization to broader zones of 120 meters of about 1 gram gold equivalent. So that target is showing real promise to deliver significant ounces going forward, and I think it will see a substantial amount of drilling. And to be fair as well, I mean, the Bonanza Ridge system most of that is probably drilled to M&I at the moment, so that doesn't need a lot of upgrading for any pre-fees economic studies.
Yeah, that's right. Because if we look at the 2022 drilling, was sort of on the eastern side of well, if you split it in two basically, and then 2021 was sort of on the western side, where historical drilling was too. I mean, there's been a decent amount of drilling on Bonanza basically, but overall your average depth of on Ranch, you're not going below 400 meters, right?
Yeah, I mean, at Steve, it's documented down to 400 meters. In the Thesis corridor, we're down about 300 vertical meters in places, and the Ridge system, I think, is probably about 200 vertical meters. So there's really good depth continuity in some of the zones. Bonanza is a bit of an exception, where it's structurally controlled mineralization, but there is also a component of stratigraphic control to the mineralization. So the geology here is a kind of layer cake stratigraphy. It's volcanic rocks, and there's certain layers of rock that are better hosts in the mineralization. So at Bonanza, for example, the fluids have come up and then migrated along kind of horizontally into one of those particular units. So you get this kind of flat-lying tabular body of mineralization in addition to the kind of fault-controlled steeper mineralization that we're effectively talking about, where that mineralization extends down hundreds of meters below surface. But one of the key things in that's really good at this for the Ranch project, similar to the lawyers, I guess, is the mineralization starts right at surface, and it's very high grade in places, and that will be a real driver for the economics and the upcoming PEA.
So whatever is driving the Cliff Creek and the Dukes and the AGB zones, that's the same thing that's driving Steve over on Ranch, but it's not the same thing that's driving Bonanza Ridge.
No, I mean, almost. So I consider the lawyer system a completely different zone. So including Steve, Bonanza Ridge, Thesis corridor, basically any of the targets at Ranch are all within what is like a 40 square kilometer structurally controlled high sulfidation epithermal field. And really all that means is that there's a lot more sulfide in the system, and the types of alteration are a little bit different, but it's quite unique and very distinctive difference than the lawyer system. But ultimately, they are probably all part of what is the broader, larger porphyry environment, where you ultimately need some sort of deep-seated porphyry system that drives all of this. And that could be 500 meters below surface. It could be 3-4 kilometers below surface. And especially on the Ranch project, you cannot create a high sulfidation epithermal system without an underlying porphyry driving the whole thing. So, I think there's probably some spatially associated porphyry system at depth adjacent or below the Ranch project. And then if you look at any of these typical kind of schematic diagrams for porphyry environments look like, you often get the low sulfidation systems offset by several kilometers. And that would be exactly kind of what Lawyers is. So when I think about it, I think of it as kind of one system, but the two deposits are different types.
So they're not, so this is not your typical sort of hub and spoke model that we're thinking about here.
I think it is exactly the hub and spoke type of model, to be honest. I mean, I don't know where the mill will end up, but for the sake of this future PEA, we're going to leave it where it is, because the critical center of mass at the moment is on the Lawyers project. And as you pointed out, that mill will be located basically between AGB, Cliff Creek, and Dukes Ridge, on this big, broad central plateau. And then, it will obviously take feed from each of those deposits. And if you drop off the backside of that plateau, you get in a big, broad valley, and then it climbs to the Ranch project, which is about 25 kilometers to the north along what is already a very well, in fact, we just upgraded and provided new road access to the Ranch project. All the bridges are kind of rated to 70 plus tons now. But as I said, about 25 kilometers to the north, you get to Ranch, and there's numerous, I think what we'll see is numerous different pits on the Ranch project, from Bonanza Ridge pit to, some different pits on the Thesis structural corridor to eventually Steve will come into that mix as well, the JK zone, among others. And that will all provide feed for what will be a kind of centralized milling facility. And the nice thing is trucking from Ranch is basically downhill the whole way, so it really works in our favor. And I think that's just going to continue, and beyond that, beyond the project, the Lawyers and the Ranch project, I think there's potential to provide feed from other deposits in the area as well. So I think the district is really emerging as something very substantial.
I do want to talk a little bit more about the geology here, but because you're mentioning trucking and the topography we have going on there, could you envision a conveyor belt, or is that too much?
No, it's definitely a possibility. And you won't see anything like that in the PEA, but we're certainly looking at that as kind of a potential future option. And really just doing the trade-off studies to, does it make sense basically for the cost associated.
But you'll probably have to get the LOM up to make it make sense.
Exactly, yeah. And I don't think you're going to see a big change in the LOM in this future PEA. Really, our objective was to provide, and maybe you can throw this image up, but I wouldn't say problem, but one of the opportunities with the existing Lawyers open pit PEA production profile was that, in the first couple of years, it was about a couple 100,000 ounces of gold, silver equivalent ounces, that is. And then you can see years 3 through 9, it basically drops off quite a bit. And that is just due to stripping and stripping and stripping to get down to what is much better ounces at depth, basically at the bottom of the pits. And you can see them coming at the end of the mine life. And obviously we get no value for that whatsoever. So there's a real opportunity here to try and bring higher grade ounces forward in the mine life, increase the yearly production. And, that really formed the basis of our strategic plan for last year's drill program. How can we bring higher grade ounces forward in that production profile? And that was really two things: looking at building out that underground resource, mineable resource on the Lawyers project, and that with the idea that those underground ounces would come in first couple of years of production, in addition to defining and continuing to expand high-grade near-surface ounces on the Ranch project. So the combination of those two things, I think you should see improved production across that 12-year mine life substantially, and also much higher grade ounces in the first few years. And then that should look much more like a typical production profile, and we should see much improved economics as a result of that.
Hmm. How do you deal with great variability on what's going to be coming out of ranch? Because when I looked at the Bonanza Ridge, so there was it was nothing too much out of the ordinary, but there is great variability. So do you expect that to pick up in this year's drilling, or is it the other way around?
Sorry, I'm not sure I quite understand the question, but
It's just around grade variability. Like, how do you expect? I mean, do you expect grade variability to be growing, or do you expect to have less grade variability?
no, I think there's always going to be great variability there. I mean, I think that's just part of the nature of the beast with these type of systems, and especially the high sulfidation systems. I mean, it lawyers, it's pretty consistent. On the Cliff Creek, AGB, etc. Those are um, there's a lot less variability in the system. At Ranch, I mean, there's high grade cores and high grade pods of mineralization that are part of a much larger structurally controlled high sulfidation style of mineralization that but as you move away from those high grade cores, that grade drops off, and I think that is very manageable though in a mining scenario. So I'm not overly concerned about that, and I think we have the drill density certainly in those zones to effectively do that.
Hmm. Okay. But the plan then stays the same, new PEA by the end of 2024.
UPA will be early Q3 this year. So yeah,
Okay.
it's coming up fast, and we're working on that simultaneously with the MRE that's expected early Q2 this year. So the sooner we get that out, then the sooner we can get the PEA
Hmm.
out as well.
But this is not your. Do you think you kind of have to do another PEA after this one to have everything together, or you just move to PFS?
No, we just moved to PFS, I think,
Hmm.
yeah.
And that's
Yeah.
2025.
Maybe 2025, yeah.
Okay. So where I'm coming from with this is because I'm thinking about, well, what does the future look like? Like, do you build this thing or do you get taken out? Obviously, the first point. But then the second point, if you want to get taken out, do you have to take this any further than a PEA for you to attract the attention of some larger company?
Yeah, I mean, it's a good question, and I think we as a management team and board feel that it's in our shareholders' best interest to continue driving this forward towards production. I mean, that's how we unlock the most value for everybody, and that is our objective at the moment. And if there's interest along the way, we will certainly discuss that and entertain those uh, potential offers. But in the interim, our mandate and focus is really to continue driving this forward over the coming years. And we have, uh, um, project schedule right through to production. So we have a fantastic engineering team, and we've got that work very much in hand, and it's laid out over the next few years.
Hmm. Well, that's maybe also fun to talk about, although early days. But when do you envision production out of this district, regardless of this project, regardless of who produces it? When do you think is reasonable to expect gold to come out of there?
I think the latter part of this decade. So, I mean, potentially 2029. I think we could be in production, we could be construction 2028. And, obviously don't hold me to that. There's a lot of variables ahead here. But, what we have planned and scheduled at the moment, that is potentially what, what, when gold could be getting poured.
I always like asking have you signed any CA agreements? Because that sort of defeats the purpose of a CA. But you don't have to tell me if there's any specific names, but is there interest from larger companies?
I mean, yeah, obviously I can't talk about that, but I think, what I can talk about is British Columbia, and obviously it's a fantastic jurisdiction, and where we are in Tutigon, Freeport McMoran has a joint venture agreement with AMARC. Centerra is just down the road, and they own the Cames mine, which is about 45 kilometers south east of the Lawyers project. And then within the general vicinity of this north central British Columbia, I mean, there's all of the largest well-known producers are there. It's a fantastic jurisdiction to be working in. There's been over $5 billion worth of M&A transactions alone in this area in the last 5 years. So, I think you're going to see more mid-tiers and majors moving into this area as they look to kind of de-risk their portfolios and focus on more stable jurisdictions going forward. So, yeah, sorry, that's a bit of a roundabout way answering your question, but
No, I know.
best I
I
can.
mean, you're not gonna tell me. Well, there's companies who would news release their, we signed a CA and then put that in a news release. Kind of funny at times, but it's our crazy little sector. What you're now one of the larger landholders though after consolidation in the area, in the immediate area. Any plans to become an even larger landholder?
We have been expanding our land position, and we've not really documented this yet, but we have been basically picking up open ground as it becomes available, particularly at the northern end of the ranch project. So we've increased our land holdings. I couldn't give you an exact hectares, but reasonably substantially to the north on the ranch project over the last few months.
But it's to the north. I mean that already counts for something. What are you chasing up there?
There's very interesting geology up there. You get a bit deeper in the stratigraphy and you get closer to there's a very important contact in north central British Columbia within what is called the Stikine terrain. And basically, if you're at that kind of Triassic Jurassic boundary, a couple 100 million-year-old boundary, it's what is called an unconformity basically, but there's a lot of mineral deposits in the region associated with that time horizon, and the rocks to the north are a bit older, and it looks like quite a compelling area to be exploring.
Okay. And is that the only thing that you're seeing out? Well, you like rocks. That's not something you can hide. But is that are those the only rocks in the area that you like, or do you think you could expand in other directions?
So there's no more open ground anywhere really. So if we were to expand, we would be looking at acquiring other projects or optioning other projects, and that is the only other potential there really.
Well, is there willingness, or what has to happen for there to be willingness to do that?
I think right now we've got our hands full for sure. I know we're really trying to just get our arms around what the Lawyers and Ranch projects look like as a combined entity, and really, there's a lot of blue sky potential in the Ranch project, and I know everybody typically says that, but that 40 square kilometer epithermal field that I was telling you about, we've got so many targets within that area that look a lot like Steve and a lot like the other Bonanza Zone, etc., that we haven't drill tested yet. So, we've certainly got enough options ahead of us to focus on what we have at the moment.
Okay, that's a fair answer. That's how I would also envision it. But this is going to be 2024. Is that going to be your busiest year so far? I think it is, right?
It was, in terms of like major catalysts for the company, definitely. I mean, ongoing drill results for the first time, global resource across both projects, and then updated PEA. So huge catalyst for the company, and I think we should see significant growth as a result of that.
As I mentioned at the beginning, where I'm coming from with this question is because I'm trying to envision what G&A is going to look like. As I mentioned at the beginning, that's right now at 300 to 350 a month, depending on which quarter you look at. Is that what you're budgeting, give or take, for G&A for 2024 as well?
Yeah, pretty much. It might go up slightly. I mean, I think we're looking to continue expanding our team as we grow. But I think it should be in and around that ballpark.
What are you looking to add to the team?
So we're currently, I mean, I wear a couple of hats at the moment, I guess. I still kind of somewhat oversee the geology program. So we're potentially looking at adding some technical people there. And we're actively looking to add a new chairman to the board as well.
Okay. Interesting. Are you looking for more geos on the board? Do you need a money guy? What do you need?
No, I think we've got the geo thing covered between myself and Thomas Mumford, who's the VP exit Scotty Gold. He has a similar background to myself, technical geologist with PhD. So we're trying to diversify out of that a little bit. And I think, what we're looking for is some engineering bench strength, really, as we can transition from exploration through to development. That's really the goal.
Yeah, smart. I like that. I like that part. What else is happening next year? What are you doing for marketing? You and I met at a conference. Are you planning any other conferences, or what are you doing for marketing?
Yeah, I mean, we've got the first 3-4 months are pretty busy here for us. We are this coming week. We've got VRIC in Vancouver, Roundup, and then following that in February, I'm going to be in New York and Toronto, just a bit of a road show. March, we're back in Europe for the Swiss Mining Institute in Zurich. And I'm probably going to be passing through London as well to visit some shareholders. And then May, we are at the Concord conference in Palm Springs. So a pretty busy schedule ahead for the spring.
Yeah. I believe PDAC is at the beginning of March too.
PDAC as well. Thank you very much.
Yeah.
Completely glossed on that one.
I might see you there too. Yeah, that'd be interesting. New York, that's interesting. I'm always interested when I hear New York coming up, because that's not typically where interest for these companies comes from. But if you have a good guy or a gal to lead you around and introduce you to some people, that can be beneficial too. Yeah, good. I think I'm getting an idea of what you're doing throughout 2024, how much money you're spending and all that. Again, I'll be sticking around. We'll be following up as you have news. But yeah, what else am I forgetting to ask you here?
No, I think we've covered all the highlights for sure. And just to reiterate one more time, there's going to be continued news flow from Ranch drill results over the next few weeks to months, and that will lead into a new global resource for both projects. And that, whatever that resource is, and hopefully I've convinced you over the course of this discussion that that resource is very much going to be a starting point. There's a lot of additional targets, and all the zones on the Ranch project effectively remain open. So there's a lot of potential to continue building on that and continue to grow the resource. So I think you're going to see this district continue to expand substantially. And simultaneously, we'll be working on the economics study, the PEA, and that will pull in the underground ounces from lawyers and high-grade near-surface mineralization at Ranch. It should be a material improvement to what was the PEA for lawyers, which was, as just a reminder, was purely just looking at an open pit mining scenario. So big year ahead for Thesis.
All right. Well, I'll be around. Make sure to ask you annoying questions with all these updates. So thank you so much for being here today.
My pleasure. Thanks.